Most people have no idea what's going to happen next with XRP. And now I'm going to read some words from Tom Lee, who got it right. It had to do with tech stocks. He was talking about how the economy was expected to keep going strong even though the markets were very uncertain. It's been a great week for the stock market, crypto market, and everything else. So he's going to share some more really important ideas and what's most likely to happen next. I have to say that his research is really great, and I think a lot of you here today will find it very useful. We're going to go into a lot of detail about it to make sure you understand how Tom Lee and I are taking advantage of it and what a lot of other people are doing right now to make sure they're setting themselves up for the future financially. Before you watch, please read the warnings and hit the like button so everyone can see it. Now let's see what Tom Lee has to say. But Tom, what did you see that other people seem to miss? I thought we were going to zero. Plus, Brian, zero is always a chance. But I think it comes down to three things. The first is that the high-yield market never supported the fear that experts were expressing about the economy. Spreads on high-yield bonds did get wider, reaching about 439 basis points. In a slump, on the other hand, they'd go up to about 700 and then drop back to around 360. The second is that, as you say, the stock market did have a liquidation event. However, all waterfall drops, 17 of 18 since 1950, had a V-shaped recovery. We were aware that the bottom would be shaped like a V when it was set. It was only really different in 2022 because of Jackson Hole. Third, we had a lot of faith in companies. You should know that these companies have been through a lot. They made it through a flu shutdown, survived a recovery that caused a whip impact. They made it through the fastest rate hikes ever. So I think businesses should really be praised. They've shown earnings and estimates that are much better than we thought they would be, even for the first quarter. I think those three things are why we told our clients to sort of buckle down and even get more publicity. I deleted it, which is something I don't usually do, Kelly. Around that time, I sent out a tweet. I told them, you won't really lose money until you sell. I really meant it. I needed to. Still, I meant what I said, Tom. I was talking about this show on another network that said seniors are going away. Someone got a hold of my angry tweet or post and it took this life itself. But my point was that in the style world, you shouldn't try to time the market unless you're leaving in a few months, a year, or your ADS or something. It's better to be in the market for a long time, right? Like that's one thing if you're a trader, hedge fund. But if you're an investor with a horizon of more than 5 years, it's clear that the trend is to the upside. However, we believed that the sell-off became so highly charged that it took on a life of its own. Do you agree with that? Yes. I mean, there are a few things going on. We brought it up during the tariff disruption, but we already knew that more than 60% of skilled investors in stocks lean Democratic, so they had a half-full picture of what the White House was doing. So the move in stocks was bigger than the move in bonds, which is the opposite of what happens in the fixed income world. 60% of people who handle bonds are registered Republicans. For that reason, I believe what the bond market did gives you a better warning, at least in this case. The second is the 10 best days, which has been talked about a lot. There were several times we pointed out that the S&P only returned 3% a year in 2023 and 2024 if you took out the 10 best days of those years. As you say, you need to stay in the market so that you can get the 20% gains. People also sold a lot of shares when the price was 48.35, and now they're buying back in. That means they missed a gain of 1,000 points or 20% by 2025. Have you thought about what kind of bonds would pay the most at these prices? Does it matter? Really, to follow up on what we were talking about, what do you say now for those who missed it and wish they had piled in at the lows a month ago? That no one wants to go right now, okay? Now that stocks are back at all-time highs, I'm going to make my move. Then, we might go down again. So, here are some general tips. You know what? I have some advice for you. Okay, so I don't think the 4% rate on the 10-year note is too much for the government, the economy, or businesses right now. That's why I believe it's an amount of funding at which businesses can make a profit. Then there's a lot to be happy about in 2026. We're going to have less control. We are done with the trade mess. If we get tax cuts, we might be able to trade more freely with other countries, which would be good for US businesses' profits. So far this year, the market has been flat through May. No one should feel like they missed anything. They might be able to buy a lot of businesses, in my opinion. A lot of stocks went down in value, but I still see chances in these names that have been written off. We talk to our clients about it, whether it's the Mag 7 or Tesla. Yes, there's still a lot of chances in the small caps. Sure, of course. There are some great points made by Tom Lee. The way he talked about it really hit home for me. Most of the price changes in the stock market and the cryptocurrency market happen within 20 days. You'll probably miss out on those gains if you try to time the market too much. Because of this, I believe it is very important to hold on to XRP cryptocurrency for a long time, especially now. Having said that, it's clear that the US economy is getting stronger. Right now, the crypto market is doing really well. There are a lot of stocks out there. Now we can see that Donald Trump is putting more pressure on Jerome Powell because of this. But he won't cut interest rates. He says it's not fair to the United States. And I think Donald Trump is beginning to make his point. You can see that China and Europe are doing it. What's taking so long, Jerome? Why are you still here? Truth be told, a lot of people have a lot of different ideas about why that is. I mean, I'd like to know what you guys think in the comments. In the end, though, I think we can all agree that rates need to go down. The stock market is doing well. We're ready for a great gathering. We're ready for the bull market to start over here. After this, we also see that Trump says the stock market will go even higher, even after all the rises we've already had, which I find very interesting. But there's something very strange going on here. From Cauchy forecast markets, we can see that since the US-China trade deal, markets now only expect 2 interest rate cuts in 2025 instead of the 3 that were expected before. This is odd. While I'm not sure why the prediction markets have changed their minds, I believe that Jerome Powell's words have a lot to do with this. He's basically said that he's not in a hurry to cut rates in recent talks at FedListen and other places. He's been saying this for about 3 or 4 months now. So with that in mind, I believe it is already 5 months into the year. We only have about 7 months left, or 6.5 months. So, I mean, how long does he really have to lower rates? For us to get the numbers that a lot of people were predicting before, which was something like 5 rate cuts, he would have to cut rates back to back 2 to 3 months in a row. I think that is completely ridiculous. Of course, what's going on between the US and China is also very interesting. Like, Trump has changed his mind about China in a big way. He left from, screw China. China is not a business partner for us. We're going to do business with India instead of China, which is great. We're also letting trade and everything else happen. Great change in the way things are going here. I'd like to play this short clip that he just got here so you can get a sense of how Trump talks about China now. Very, very strange. He used to say, Europe is a closer partner, China is a bit of an enemy, and now it's the exact opposite. We are at war with Europe. China is a good friend. Pay attention to this. The United Kingdom and I have just reached a historic trade deal, and over the weekend we came to a major agreement with China. These are both deals that are still open. They agreed that we should take it down. We need to write down the little things. Scott, you need to work hard on that. But China has decided to let the US trade with and do other things with them. Will do that. They have to do it, though. We'll see what takes place. We had a great meeting with both of those countries, okay? Also everything else. In essence, Trump said that the US is planning to send more goods and services to China in order to close the trade gap. The US will still have higher taxes on China than China does on the US. The difference between 30% and 10% is pretty much what we're seeing right now, with a few key exceptions. But all of this is part of the talk they're having with China right now. So cool stuff. When it comes to XRP in particular, I believe that many people are still unaware of how useful it could be. XRP ETP has been doing crazy high numbers, and things are only going to get better from here on out. ETFs, I want to warn you that you're still coming. I think there will be at least 2 rate cuts this year. On top of that, there will be a lot more. So I believe that sleeping on XRP and HBAR is a huge mistake right now, and I believe that many of you are not